Next, we have a panel, Law is the Key, How Proper Regulatory Development Can Lead Us to the Blockchain Future. Your moderator is Naeem Aslam, CMA at ThinkMarkets, columnist at Forbes, guest lecturer at the London School of Economics. Please welcome Naeem. Next, we have Julian Zegelman, angel investor, founding partner at TMT Blockchain Fund, multiple SuperLawyer Award winner. Please welcome Julian. Cal Evans, founder of Gresham International, board member of the British Blockchain Association. Please welcome Cal. Gianluca Massini Rosati, founder and CEO of Xriba, best-selling author, tax accounting expert. Please welcome Gianluca. Andrew Rossow, attorney, adjunct law professor, media consultant for ABC, Fox, and NBC. Please welcome Andrew. And Leslie Katz, shareholder at Greenberg, Traurig, LLP, multiple tech and business award winner. Please welcome Leslie. Thank you.
Please be seated. Thank you. Good afternoon. This is the first time for me in Vegas. I'm very excited. So we're going to keep it short, right? So we can enjoy, all of us. But let me start with a brief intro about myself. I work as a chief market analyst. I come from a traditional hedge fund background as a hedge fund trader for Bank of New York Mellon. I write for Forbes and also a regular guest with the tier 1 media such as CNBC. So starting with an intro, Julian, please briefly describe yourself. What do you do? How you are involved in this space? And most importantly, how enthusiastic are you about the space?
Absolutely. Well, one thing I don't do is I don't wear a suit, and I almost, put to shame here by such a good-looking crowd.
I should have come with the shorts, right?
Exactly. So I first got into the space in 2014, and actually was very, very endearing and not coincidental that one of the first speeches I heard about the crypto space in 2014 was actually by Bobby Lee at Litecoin, and I think he was just launching that whole cryptocurrency movement at that time. I got into cryptocurrency as a practicing attorney, which I did for about 15 years. And I transitioned to being a venture capitalist and a general partner at TMT Blockchain Fund, which is the second fund from our family of funds that invest in blockchain technologies. And our first fund trades on the London Stock Exchange. And I'm very enthusiastic about the space, and by space I mean blockchain technology as a technology, which has many facets. Cryptocurrencies is just one of them, which, as we all know, is not doing that great.
Hi, guys. So I started life as an attorney. I practiced in the UK, helping corporations become compliant internationally. I then worked in the United States, in New York and California, doing the same thing in the tech world. The minute I heard about cryptocurrencies, I fell in love with it. Any of you want to hear the story of how I was drunkenly at a party and fell over somebody's mining rig in their garage? I'll be more than happy to share it with you. Fell in love with it instantly and focused my work around it. Really proud of what kind of I and the team at Gresham have achieved now. We're one of the few firms that are recognized by the SEC as a compliance firm. We work with the Bank of England, the European Parliament, the government of Estonia, government of Dubai. I personally write for the guys at Cointelegraph, Crypto Slate, and some other publications as well, although there's some great authors on this panel as well. So really excited about the space, love where we are. I always take the approach of it's realistic solutions for new problems that we're facing. Yeah, really taking a lead in things.
Thank you.
Hello, everybody, and welcome for being here today. I'm Gianluca Massini Rosati. I've been an entrepreneur for the last 15 years. And I've written some books regarding taxes and especially how to save money on taxes. Of course, 100% legally. I've got several companies in several industries, traditional industries. And the most important one is an accountancy firm in Italy with more than 30 accountants and 10,000 customers. Last year, I founded Xriba, that is an AI and a protocol that writes accounts into the blockchain. So the aim is to bring transparency and accountability to this space, because I think that is something that we lack here. And we are trying to work with regulators, with institutions like European Parliament or United Nations to change for the better this world.
Hi, everybody. My name's Andrew Rossow. I'm a full-time practicing attorney. I consider myself a millennial attorney. I'm 28. I grew up with this technology. I'm passionate about it, and specifically with this space being the blockchain area, how law technology affects our generation, how it affects how we use social media and communicate, and most of all, our business ventures. This path has taken me to write for the local bar associations. I work with several media networks like ABC and Fox. I write for Forbes and a bunch of other cryptocurrency publications like Blockchain Magazine and Grit Daily, and I appreciate the opportunity to be here, and I look forward to a wonderful discussion with my fellow panel members.
Hi, I'm Leslie Katz. I'm also currently a full-time attorney, but in a prior iteration, I was a politician, so I have a passion for the intersection of technology and policy, and really put forward a lot of legislation with respect to advancing the technology industry. So I really started getting into blockchain a few years ago. A client came to me wanting to do an ICO, and as I started digging into it, just got so excited about it really being the intersection of everything I'm passionate about: emerging technologies, being creative, being able to do have social impact, policy. And as a lawyer, I have to confess, many of our days are not all that interesting, but being in the blockchain space is fascinating, with so many different issues coming up and really all the creative challenges that we have. I'm at a firm, Greenberg, Traurig, where we have over 2,000 attorneys worldwide, about 38 offices, and we now have over 80 attorneys that are part of our blockchain task force. So I'm one of the original founders of the task force and part of our sort of executive leadership for that group. But I often joke that my role is as a concierge for our clients, and I can go to my colleague who is a former FinCEN enforcer or somebody who used to work at the SEC and get some good insights as we help our clients navigate some of the issues I've worked on. I joke I've been at the beginning, the middle, and the end, where we've helped launch ICOs. I did a reverse ICO where another firm had launched them and made a few mistakes, so we had to fix it, and others that are coming in at the very end. So even those that unfortunately have been subject to investigation from the SEC. So it's been exciting to see all the different aspects in the industry, and looking forward to being part of the panel.
Thank you. The SEC subject is really interesting because I do speak at the European headquarters talking about the blockchain and the observability forum. And this is the topic which is always there, that, okay, the SEC is too strict, or the Europeans are going to take in the lead in terms of arbitrage of this jurisdiction. So, Carl, let me start with you, because given that you have done something on that, do you think there is a real arbitrage of jurisdiction? Like, for companies, we could be seeing so many entrepreneurs sitting here, and then they are confused, as always, where they're going to go with respect to their ICO. Should they go to do their ICO over in States, or whether they should go over somewhere in Europe, and what different jurisdiction they should choose?
Yeah, great question. And I've heard you speaking at the European Parliament, by the way. I would advise anybody to listen to it. It's fantastic. The situation is this, guys. The question that we're always asked is, what's the best jurisdiction to conduct your ICO from, your post-cryptocurrency operations, or perhaps even your blockchain activities, funds, etc. And the answer I always give is this. If somebody ever recommends one jurisdiction to you, I want you to walk out the room, because it's not the right answer. The actual answer to that question is multi-layered. It depends on a number of things: how much money you want to raise, who you want to own the company, whether you've already got any seed investors, whether you want to register as a security. We've now seen an evolution from the days of, oh, you should just pick this jurisdiction and then fundamentally run everything from there. To go back to the arbitrage point, I think that's huge. Last week, we saw information come out of the European Parliament where they were talking about putting caps on the amount of money that ICOs can raise. Many people are seeing this as a step backwards, but actually, it's quite an organic step. the European structure and the US structure are actually inherently similar. It's almost like a federalized nature. There's a top layer protocol of governing bodies and jurisdiction that's written that's then filtered down onto state level with various bodies looking after it. What that effectively means is this: it doesn't really matter what happens at a state level. So to a degree, it doesn't matter what the state of California does, or the country of Malta does, or even, Estonia. What matters is what happens at that federal level, because these guys can come in, they can pull the rug out, and they can take everything away. Now, what we've typically seen historically with the legislation is that it starts at the top and it works its way down. But in this instance, we're actually seeing the smaller bodies taking the lead and creating things, and it's actually working its way up. And that is what is creating the indecision. That is what is fueling the arbitrage. Because everybody is almost taking a wait-and-see approach, and they're keen to find out what's happening in different jurisdictions. And this is inherently driven by the public opinion and the government opinion of what is happening in that particular jurisdiction. Take the US, take the EU, they are driven by wanting to be financial hubs. But then, of course, nobody's looking at the other horses in the race. There are countries in Asia and the Middle East that are pioneering crypto legislation that's already being pushed through. And there are also others banning it as well.
Sure. So let me ask you this. Let's say maybe perhaps if you wanted to weigh in here. Of course, US is the biggest market when it comes to stock market or the normal derivative market, right? Is it possible that everyone is just in a wait-and-see game, and then once the SEC says yes, this arbitrage of jurisdiction would end right there, and everyone would think, look, US is the biggest market, we're just going to go and we're going to raise money out of there. Do you think there is a possibility of that? What are your views on it?
I think it's gotten too far to come back to that. I think so much is happening all around the world. I often feel like the U.S. needs to figure this out sooner rather than later. We're going to really fall too far behind, and a lot of the talent and creativity is just going to migrate away, and it'll be hard to bring it back. That being said, certainly most people view a large share of the investors are in the U.S., so they're going to want to figure out how to comply and get funding from the U.S. But I think if you look at a lot of the countries, and Cal just mentioned, several others, they follow a fairly similar regulatory scheme. So eventually, I think the U.S. will figure it out. Hopefully for all of us, there'll be a little bit more clarity coming down the pike. I guess I'm the optimist. I think it will happen probably sooner rather than later. And I've spoken to some of the folks in the decision-making roles, and they get it. They're now realizing that they've got to start doing something. They can't just sort of sit back and try to figure it out. And you're seeing government, at least in the U.S., move faster than it usually does. But do I think it'll all come to the U.S.? I would doubt it at this juncture. There's just so much happening all around the world now. But there might be a little bit more coalescing as to where more will be happening or which specific jurisdictions it'll happen in.
I completely concur, because even within Europe, are there any people who are actually holding ICOs in Europe, or they have registered their ICOs in Europe? No, not many people. Even within Europe, you have smaller economies like Malta, Gibraltar, taking the lead, right? But the bigger countries, such as France, Germany, we do not hear anything from these guys, right? An example of that would be ECB, right? ECB, we all know, European Central Bank, is pretty much does what the Germany wants to do. Now, Germany has taken a seat back. Germany hasn't said that, okay, hey, all of you guys come here and then let's start doing the ICO here. But the smaller countries like Gibraltar and Malta, they're doing a lot of things. So, Andrew, what are your views? What do you think that your thoughts around this?
I think when it comes to this space, I think you have an entirely new, and again, I'm going to bring in the millennial aspect to it. You have an entirely new background and demographic of people that are coming into this with different mindsets, different ideas, different styles of where they see this space going. And I think it's very hard in a lot of ways to kind of pinpoint where it's going, because whether you're in the technology sector or in real estate or whatever market you're in, there's always going to be a kind of an alternative pathway and a better location, a better a market for you to be in.
And if I can just jump in on it, because I think it's also important to distinguish the ICO process, right, which has also changed drastically if you look at the past 2 years, and drastically in terms of legal structure, financial terms, the way the deals are done, the profile of the investors, and the underlying business. Because I think a lot of people pay a lot of attention to legal mechanics, which is important, but when you really dig into the depth of it, the underlying infrastructure, the banks, the venture capital funds, the brokers, the market makers, etc., they're pretty much jurisdiction agnostic, because if you think about it, you still have to deal with your end user and investor. And what a lot of folks heading into this process doesn't realize that it's not an automatic pass. So you could be a Maltese company, and Malta has beautiful legislation on distributed ledger technologies, and so does Gibraltar, and so did Singapore. But what happens then is you may have a user in the United States or Canada or Australia. You may be working with a cryptocurrency exchange that is licensed in one jurisdiction but not licensed in another. And that's when, I think, as Leslie was saying and my colleagues were saying, it becomes a very multi-jurisdictional issue. And so folks realize that jurisdiction does not matter. Because if their biggest market is in the US, they have to be compliant in the US. And oftentimes they come back and work through a U.S. company, and sometimes they say no to an ICO because it just doesn't work for their business.
So, Julian, for you're an angel investor.
I'm actually a GP with a fund. I used to be, yeah. But I still angel invest as well.
Right. So let's say that if there is a country like Liechtenstein or a smaller country like Malta, they come up with the legislation, and you are an investor, right? So I'm investing into it. But then there is a country within the European Union or like the SEC over in the US, they say, you know what, ABC country, because it's a small country, we got to stop them, and this legislation is no longer in play. And you have invested a lot of money in that particular firm. So what would you do?
So it's a great question, a very good hypothetical, which would have never happened because we would not have invested in that kind of company in that type of jurisdiction. So one of the things we do, which I think, which is to me, we're coming from a traditional venture capital background before the blockchain world, the past 4 years are just insanely, it's like going to Disneyland, because some things happen that could have never happened before, like my colleagues were saying. So for example, legal due diligence in a lot of the token sale deals is non-existent. A lot of the deals are still like a handshake, and you stare in the founder's eyes and you say, okay, I believe you. And now we don't do a lot of those deals, but I personally have done it, right? Because my risk profile and the check size is smaller, and the fund is a different story. But jurisdictional risks and legal risks are a big, big factor when traditional funds look at a deal for that exact reason.
Sure. So I think let me bring Gianluca, because you are one of those people who went out there in the bear market and you've been able to raise sufficient capital for your ICO. Was this a challenge for you, that what sort of a jurisdiction you picked, even though your entire ICO is all about regulation and transparency?
Yes, of course. What we are doing is in the same direction of the regulators. So we are building a protocol and AI to bring transparency. So we will collaborate with the regulator. Something that I'm seeing that is happening, and also for us it's the same. We decide to choose a jurisdiction like Isle of Man. This is a small island close to UK. There is out of the EU, so the rules are quite straightforward, and speaking with the regulator is quite easy. And it was almost quite easy to incorporate the company and issue the tokens and run the ICO. And at the same time, we have a sister company in the UK with that one we are running the business. So the structure will have two companies. One company to raise money, that is in Isle of Man, it's outside the EU, so can just follow the rules there, and it's quite easy to raise money there. And another company in the UK, that is an European country with a passport to trade with all the countries in Europe, and of course, in the rest of the world, and it works for us.
Great. Angie, you specifically work on the cybersecurity side, right? And the hacks and everything around that is a major, major issue. Hence, all regulators are very sensitive to this. What do you think? What should be the stance around that?
You know, I think it starts with just being smart, and it's as basic as the common sense for any business organization or even personal home security is make sure you're protected. You know, whether you're opening emails, clicking links, you know, it's the idea of not always believing what you read or see. You know, you have to ask the proper questions. You have to look at it as if it were a stock or something that's going to affect your financial future, your family's financial future. And I think in an age where you have all these different types of data breaches, people don't always expect it to happen to them. They see these stories on the news or to colleagues, but everyone believes that they are doing, to an extent, at least a bare minimal amount of what's required. So when it comes to, you know, clients I've seen or other organizations that we advise, we always suggest having a data incident response policy, whether it's software, whether it's client data, and bringing in the cryptocurrency and digital assets, whether you're, you know, making a will or signing a contract. Make sure your assets are protected, because if you don't know what you have, how can you understand the ramifications of when something does happen? What do you do?
I think when it comes to ICOs and regulations, price stability is one of the key factors, right? Because whether you've done the ICO and it's all successful, you wanted to go and list the tokens and stuff, what are your views? Should the regulators, I mean, how far we are on this curve?
So I want to talk about the U.S. experience, because I think a lot of the questions are being asked. You know, it's been 2 years, right? When in 2018, the early ICOs started, if you don't count the outliers earlier. The wave started in 2016, and the theme is still that the regulators have not spoken. But to me, the regulators have spoken a long time ago, and in the U.S., it's pretty clear that with very few exceptions, and this is not legal advice, I don't practice law anymore, but with very few exceptions, if you're selling a token before the network is live and your token passes the Howey test, it's a security. And for the past 75 years or longer, the SEC has come up with rules for everything. So you're talking about price stability. That's, I think, the thing that blows away the next frontier, which is the lack of compliant crypto exchanges. If you look at traditional securities markets in the US, there are rules for everything. Insider trading, legal market making, daily volumes, price stability. If you're a public company and your stock jumps up or down by 20% without any perceived reasons, you are going to get a call, a friendly call from the SEC saying, hey, what's going on? You know, have you looked at Bloomberg terminal this morning? The same is slowly happening right now in terms of enforcement, but will happen to the token market. And so I think one of the challenges for larger projects thinking about tokens, and why larger raises have largely liquid tokens, is because nobody wants to jump into the fire first and list with the understanding that most likely 99 times out of 100, they're going to break the law in the US. But that's my opinion.
Yeah, I think that's actually, just to touch on that, a really good point. Because what we speak about, this jurisdictionally agnostic principle, and then we're kind of surprised when the regulators aren't jumping in and doing anything on the secondary market. Because the situation is this. I'm pretty sure for the first time in human history, we have a completely agnostic secondary market in a tradable commodity, which means that the laws within your country are kind of null and void to a degree. Because if you look, for example, let's take the US and Russia. There is no such law as insider trading in the Russian Federation. So if I'm not placing a trade within the United States, why would I not just go and place a trade on the exact same exchange in the Russian Federation?
Sure. Yeah. Leslie?
I agree. And I think one point that we sort of glossed over, but just sort of going back to, we're talking about, I just want to make a point, we're talking about blockchain, and that's distinct from ICOs. And as you're just going back a few moments ago when we were talking about adoption, we're seeing all the big players adopting blockchain. They may not be doing their own ICO, but pretty much, you know, it's a who's who of, you know, the Fortune 100 companies that are all in the blockchain space in some capacity. So then going back to your question about the secondary market, you know, it really, you know, agree with everything the others just said. It's, I think it really is agnostic. Also, I think the SEC, we don't really necessarily want them to come out with new rules and new guidelines, but just guidance on how to conform and be allowed to move forward. One of the problems is we look at regulations, you don't want it overly regulated in a way that creates a whole new construct. So I think what the folks at the SEC, the CFTC, and other regulatory bodies are doing is they're coming out with speeches, they're coming out with statements, they're coming out with a variety of different things that kind of dance around it. And from the enforcement side, what we're seeing quite a bit of is after they've started, for the companies that have received the subpoenas, they're trying to come up with guidelines for those companies to be compliant. Do they return money just to their U.S. investors or the U.S. and their foreign investors? Do they register as a security even if they came out with having been registered? So they're looking at all these guidelines in the form of examples as opposed to actually coming up with very hard and fast regulations. But in terms of the secondary market, I think that's, we're going to just see that play out on a more global basis.
Gianluca, your project, it's about working very much in line with what regulators want, because regulators want more transparency. So I believe that when you were at the European Parliament and then you did your presentation, what was the view? Do you think that that is going to continue, and are we going to see more projects in this line? And how did they receive that? Do you think the projects like these would bring more transparency?
Sure. We are working very close to the European Parliament, and I met a member of the European Parliament a couple of months ago, and let him see what our AI and our protocol does. And of course, he started to understand immediately how our technology can improve the system and solve a lot of problems that they have in tracking the funds, for example, because the European government gives to European companies billions each year, but they lost this money. They don't know where this money is being spent. So as soon as he saw our technology, he understood immediately that using this protocol, they can solve this problem. And this problem could be applied also to ICOs, for example, because if all the companies that run ICOs is willing to adhere to this protocol and record all the transaction in the same place, all the regulators can see what they are doing with the money. And I think that one of the most important concern that the regulator has in this moment is about the transparency and the way in which the money is being spent. So they are concerned about the loss of the money for the investors. Also because this market is not regulated, so the most part of the investors are common people. They are not professionals. And in this way, the regulator wants not they to lose money. So it's important. And regarding transparency, I think that one step forward will be done as soon as we will have wallet with a KYC and KYB process. So as soon as we have a wallet that has a name and a surname, in this way we can solve also the transparency problem that we have in this space.
Thank you. So a very quick one before we open up the floor, because I really want more questions to come from the audience. To you, what's the best jurisdiction? Because right now it's more about the security tokens. So starting from perhaps from Leslie, what would be the best jurisdiction of your choice for security tokens?
Well, I agree with Cal that it's going to depend on the fact pattern before you pick a jurisdiction. I think if you're going to come to the United States, though, there is a pretty clear path on what you need to do to be compliant. And I often say to people, it's not, people get scared about having to do what you need to file to be compliant. It might take a little bit longer than things were doing in 2017, where people just coming out with their ICOs. But the guidelines are there, doing a private placement memo or other things along those lines to lead up to being compliant in the US. It's not as onerous as people think it is. It's going to save you a lot of time, later. So even if you want to launch in the US, there is a clear path there, and it saves you a lot of time and trouble later on. You can also, go into different jurisdictions. We're seeing a lot of companies do some things in the U.S., others elsewhere. We're going to see some hybrids, but could I pick one jurisdiction at this point? Not necessarily. It really would probably depend on, the company founders and all of that.
I suppose, Carly, you're not going to pick any?
Actually, I think the more important question now is, where are you going to base your business from after your ICO is concluded? And how are you going to manage the orchestration of the funds that you raised in your ICO, get them back into the company? Because the question now is not so much that we get asked, how do you raise money in the United States? That playbook has actually been laid out. The question is, if we choose to go for option B and not do it in the United States, how do we get money back into the United States? So,
How do you then?
Well, I'll send you my hourly rate and then we can have a conversation about that.
And if I may, real quick, I think when it comes down to it, it's a case-by-case basis, and we're all learning this together, and we're watching everyone make their move, good and bad, and, I think it's just, the answer is it depends. Yeah. It depends on every step taken along the way, and whether it's Mt. Gox or whatever breach, whatever project, again, good or bad, that comes our way, how people respond, how the consumers respond, how the SEC and these regulators are responding is something we all need to take into consideration when we are looking to invest or even, write on this stuff.
Thank you. So we really have a splendid pool of talent sitting here. I think I'm going to open the floor to the audience, so have the chance to ask any questions. We have lawyers, we have entrepreneurs, and we have a specialist sitting in cybersecurity as well. So anyone has any questions? So I think I'll have to throw this.
Can I just do one quick caveat? We haven't even touched on some other areas, but as the area's maturing, we're starting to see other issues come up, and as you mentioned, cybersecurity. Recently, everyone had to implement GDPR, and so many companies didn't even realize, certainly those in the U.S. and elsewhere, that they would need to be compliant with the GDPR requirements, even if they thought they were based elsewhere. And then you have, trade secrets, which is now going to become huge. So there's all sorts of other ancillary issues that can lead to a whole other panel.
Thank you.
I just shout? Oh, there's a microphone.
Yes, microphone.
Okay, I'm going to be throwing this to someone else, right? After that. My quick question is to Carl. You touched a point very important about the second step, which is the exchanges and this market, right? Today, even though regulations were talking about crowdfunding and how important it is to protect the investor, we live in a world that high-frequency trading is there. So inside information today can be easily, in nanoseconds, be passed in front if you have a powerful computer. We're talking about a market that also doesn't close. So we have 24 hours trading. If it's news in China, we don't wait until 9 a.m. New York time for the markets to open, so the news are equal to everyone. If you're already awake in China, or if it's 2 o'clock in the morning and you got to see that on Telegram, not even a press release or something, you get pretty much inside information. Not only that, but all the arbitrage between the exchanges. So why are the regulators of most countries not really focusing on protecting the market that already exists?
That is a great that is a great question. Thank you for that. You're very articulate. I always explain to people, and I think everybody on this stage will agree with me, there is a common misconception that we are going forward in time in terms of law and in terms of how we're interacting each other with cryptocurrencies. It's actually the opposite. We are going back in time. Think about it. What used to happen is we used to rely on gold, physical pieces of gold. Now, a moment ago, we were talking about what we were doing is we're transacting money. Money doesn't mean anything. Money is literally translates to an IOU. And when we used to deal in just gold, there were so few laws around it because it was so much easier to maintain. If I have the gold in my hand, I know what I'm doing. If I tell you this gold is worth this much, it's worth this much. If it's worth this much in India and this much in London, in fact, and that was how the East India Trading Company became one of the largest companies on the planet because they arbitraged what gold was worth in the Middle East compared to what it was worth in the North Americas. So what we are doing is we are going back in time. And the laws for this have existed for literally before any of us were born, before this building was built and Vegas was even a big thing. So to go back to your question, the reason they're not doing anything is because actually they know to create regulation around this. They've tried it time and time and time and time again through history, and it's almost impossible because everybody has to be uniform, and the world can't even agree on whether they should ban plastic straws or not. You know, they're not going to start agreeing on what they're going to do in terms of commodities trading.
Thank you. We got 30 seconds for one more question, perhaps. Yes, please.
I have a question. This is Jordan French. It's really for the whole panel. First, appreciate you all being here, especially as attorneys. I want to pick up on Wall Street Journal's report in January regarding the raft of subpoenas that were sent out. We really haven't heard a lot about those subpoenas that went out from their Office of Enforcement to a number of entities that ICO'd. If you know, can all of you update us on what you think is going through SEC enforcement's head right now, and or where they are in the timeline, given where we all last left off publicly was those subpoenas?
Guys, briefly, please.
Well, if I could just jump very briefly. So I think it's important for those folks who don't have first knowledge with the process. A subpoena is really an informational request. So when a company got a subpoena, it doesn't mean that the SEC necessarily accused it of any wrongdoing. It simply means that the SEC had a request, which the company does have to comply for, to provide more information. My understanding, just from talking to a lot of people in the industry, talking to lawyers, talking to companies that had ICOs, is that the number is very large, and there are two buckets. There is a bucket of the SEC believing that there was actual fraud, and the bucket of SEC believing that, hey guys, you really sold securities, you should not have done it, nobody knew any better at the time, how can we fix the situation? How big each bucket is, I don't know. I'm sure, because a lot of that stuff it's confidential, settlement negotiations, etc. But I'm sure Leslie will have a good update on that as well.
I was just going to say, that's absolutely right. One of the things to note, that most of the subpoenas that went out initially were voluntary. To your point, they weren't necessarily opening up investigations. The SEC themselves even have said, we'll never be able to keep pace with the industry's understanding of this technology, but we're trying to get a handle on it. So I think a lot of the subpoenas were just initially kind of fact-finding. I mean, they picked out a few of those that were involved in fraud, and those are the easy cases. I think a lot of others, they're looking at advisors, they're looking at lawyers, accountants, and others that might have given advice that led some of these companies astray, and I know they are interested in some of that. But I think what they're going to try and do is come up with some more uniform guidelines and come out with some resolution for the companies that have received the subpoenas, probably in the not too distant future. But I think it's really kind of getting a handle on it, and then just figuring out how to bring those that weren't involved in the fraudulent activities but might have just been misinformed or misguided, figure out how they're going to get into compliance. Is it becoming broker-dealers, registering, returning funds, all of the above? They've got a whole menu of options that will probably be spread about.
Sure, thank you.
Just quickly, thanks for your question, Jordan. I was actually interviewed for that Wall Street Journal piece, and we speak with the SEC quite frequently. And I just want to make clear that the SEC are always very vocal that they are not the bad guys. You can literally email them at fintech@sec.gov and ask them any question you want about your project, about regulations, and they will try and come back to you with a realistic answer to help steer you. So.
Thank you. Thank you so much. Please put your hands together for the wonderful panel.
Thank you.